Okay, so there's a very big difference when we're calculating income for the qualification on a mortgage if you are employed by somebody or you're a freelancer or self-employed, your own company, kind of doing your own thing. So if you're employed by somebody, whether you're salary or hourly, if you're a W-2 employee, you show up, you clock in, you clock out, you get your regular pay. That is what it is, very simple. Let's move over to if you're a freelancer, if you have some of these kind of odd and end jobs, maybe you drive for Lyft or Uber, maybe you work for somebody that is kind of freelancing, right? And you don't have that traditional payroll company employer like what is kind of a little more old school. That gets a little bit trickier. It does have to be something that we can source or show. Right? So if you get paid cash money under the table from somebody, we actually can't use that. But if you claim your tips, right? Like say you're a server or a bartender and you claim your tips, we can absolutely use that income. So if you are self-employed, if you are a 1099 or you are a freelancer, in most cases, we need to have a 2-year history of you being in that role. So if you were if you were W-2'd and moved over into a 1099 role, just kind of doing your own thing, even if you are getting paid better going this way, we usually have to have 2 years worth of history doing that. So that could trip you up a little bit. If this is where you fall in, let's look at your picture and see how we can best set it up. So maybe you don't have to wait the 2 years. Everybody's so different, and there's some loans that we can custom tailor where we might be able to get you to home ownership before your 2-year anniversary.